Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very good day in the markets today, and hopefully you had a beautiful weekend as well. And in today's action, guys, well, the most hated rally is back to the all-time highs. The SPY just short of the all-time highs, and the Qs very, very close to the all-time highs, off the previous all-time highs by about 40 cents. Now, why the bullish action today? Well, we did have one big piece of news. In this, Trump signs an agreement on critical minerals with Australia. In about a year from now, Trump said, we'll have so much critical mineral and rare earths that you won't know what to do with them. Talking about an $8.5 billion pipeline that we have ready to go, said the Australian Prime Minister. He hailed the minerals and rare earths pact as taking the nation's economic and defense cooperation to the next level. So that was a big piece of news today. Not much else on the table for today. Macroeconomic news, not much. You will have to wait until Friday, where we get the CPI, which is supposed to come in a bit higher this week, 3.1% in relation to last month's 2.9. But you guys know us on the channel. We like to look at the trueflation numbers, which measure about 15 million different SKUs on a daily basis. It's a much more broad analysis than the CPI or the PCE could ever bring. And you can see the number right here sitting at a cool 2.28%. So very decent market performance today. And the highlight of the day definitely was the breadth of the market. That was a concern recently. And today was a very beautiful day for the markets. Most of all your major sectors participating. So in today's video, guys, we have a few things to cover as per usual. Number one, we'll be going through our technical analysis rundown of all our major indexes. Thereafter, we'll do the same thing across our big tech list, see if there's any trades or long-term portfolio positions that we can possibly acquire before some of these companies have earnings, a lot of them having earnings next week. Towards the tail end of the video, we will take a look at everybody's favorite section, which is the biggest gainers and losers of the day, of which there were many on both sides, of course. A lot of names down in the red. Are there any opportunities here? We'll have a look. And same concept to the upside. A lot of names pushing a lot higher, especially some of these biotech and genomics names. Very interesting sector of the market, of course. And we'll have a look at some of the names that were big green today and see whether or not we're chasing or whether or not there are still some opportunities buried within these names as well. And at the very end of the video, guys, I will take you through the portfolio to show you guys which trades I was able to make today and which trades I'm carrying into the end of the week. So it should be a very fun video, possibly a shorter video as well, because we don't really have any earnings to cover today. Sure, there was a lot of earnings, but tomorrow we will really get into the the action here. Tomorrow we'll probably be covering something like a Coca-Cola, Netflix, and maybe a Texas Instruments or a Lockheed Martin, whichever of those two kind of moves the biggest. We will take a look at those. And then, of course, later on this week, we get Tesla on the Wednesday session, and then Intel, good old Intel, on Thursday. So this week, not too many massive names, but there could be some interesting names nevertheless. So let's jump right into today's video, shall we? The SPY up 1.04%, the Qs up 1.26%. Very nice market breadth. Hope you guys have your sunglasses on because it was a very big, bright green day. Most of the big tech names participating, except for NVIDIA, Broadcom, and Oracle, getting a little bit left behind on the action today. Financials, very solid recovery here today by financials. We know that they struggled towards the tail end of last week. That struggle is now largely over, apparently, right? The banks performing well, credit cards performing well, and even some of the insurance players not doing too poorly today. Healthcare, not too bad of a day for them. Nice rally off of last week's lows. And then the bottom half of the market also having a very good day. Some of the interest rate sensitive plays, a lot of industrials to the upside. A sector that continues to do somewhat poorly is still XLP, consumer defensives. A lot of them have earnings this week, so we'll see maybe if there can be some life breathed into that entire sector because they desperately need it, right? Tomorrow you get Coca-Cola, of course. You got a few more like 3M tomorrow morning. And then on Friday, you got a big one, a part of that segment, which is going to be Procter & Gamble. Taking a look at the one-day relative performance, you can see that all major sectors participating to the upside, well, all except consumer defensives, which was down ever so slightly. Basic materials running away with it today, possibly because of that Australia deal, of course. Industrials, communication services, cyclicals, and technology were some of your best performers. On the 1 week relative, where do we stand amidst all of the volatility? Real estate, as a matter of fact, is leading everybody to the upside, possibly having to do with Powell's comments last week about the end of the balance sheet runoff, of course. Communication services, defensives, healthcare performing very well as indeed. And technology, somewhat still near the bottom. But that being said, we are still in a fear environment. And a lot of people ask me, how can we possibly be in a fear environment right now in terms of consumer sentiment or in terms of market momentum if the markets are so darn close to the all-time high? Well, I'll remind you what happened, of course, right? Last week and the week prior was a big breadth sell-off, right? A lot of aspects of the market selling off in a big way. That being said, one aspect of the market that did not sell off in a big way was big tech. And of course, big tech represents most of the weight of the S&P, as you can clearly see from this chart right here. So to make things simple, just a lot of the components of the S&P, more names were down than up. And you can see that when you look at the RSP actually dropped more than the SPY, undercutting the lows, whereas the SPY did not undercut the lows by that much. So you had more breadth to the downside, but big tech did a good job of kind of just holding up. They didn't perform super poorly. They didn't perform very well. They just held up. And now you can clearly see as well, your momentum indicators are much better than on the Friday close when we did this last analysis. So percentage of stocks above their 20-day EMA, 32% plus worth of a pump today after today's market breadth. Almost back to the 50% mark, but not just quite. Now, moving into percentage of stocks above their 50-day EMA, the institutional area of support, 48%. So off the lows, but still a lot to go before we can actually call this a broad market again, such as we were calling it back in the month of September. And lastly, percentage of stocks above their 200-day EMA. This one is not terrible, right? The names have held up above their longer-term moving averages, so not many names have actually pivoted to being bearish. We have a lot of very nice pullbacks in the market right now, but no names really pivoting to a bearish stance, just some decent corrections, decent pullbacks, especially on some of the sectors that had ran very hot leading into the end of the month of October currently. So now that we're through most of the introduction, guys, and that we don't have any earnings or really big news to recap, let's just jump right into the charts. So the SPY right now, new daily uptrend. That's the low, that's the high, that's the higher low, and now you have the higher high. And the daily uptrend was put in jeopardy, guys, because we did indeed crack it, but the bears never got the follow through for the daily downtrend. So now the most hated rally resumes into a new daily uptrend. The bulls looking quite strong, but I will remind you, we did our little bit of a narrative analysis last week where we pointed to the bearish narratives at play currently, right? The AI bubble, the market being overvalued, the government shutdown, which is an ongoing concern, the jobs creation softening, which is an ongoing concern. But since the government is shut down, we actually did not get the non-farm payrolls jobs report. Maybe that's bullish for the markets, because I'm pretty sure that report is not that bullish. China tensions and tariffs, well, they lasted for 1 or 2 days. But the point I want to make here, and obviously last week, the new corporate credit / bankruptcies, you know, a bit of gray zones in terms of underwriting, especially for some of the smaller lenders, right? What you have to understand about the bearish narratives, guys, is if they don't hammer you with them every single day, the market's going to discount them immediately. The market is going to price them in. And thereafter, when the initial fear, the initial volatility is over, it'll just kind of resume its course, because its course is based on the longer term bullish macro tailwinds. The fact that we have strong GDP bolstered by AI, of course, the fact that we do have historical low unemployment, 4.3%, the fact that we do still have low-ish inflation, although sticky at 3% in terms of the official prints, of course, not so much if you look at the true inflation index. Moving on further, we do have very strong earnings, which we saw last week as well. Everything from banks to semiconductors. We have the good old AI megatrend, which is leading into the AI bubble narrative, of course. And then you got all these tax cuts as well, right? So these bullish tailwinds are what is carrying the market higher. And if you do not get hammered with these bearish negative headlines every single day, well, it's tough to really build a steamroller and just smash through the levels to the downside, right? If they only pop up for 1 day at a time. So keep that in mind. Moving on to the QQQs right now. The Qs, not too bad of a day either. New daily uptrend underway. Your new daily higher lows are right down here at about 596, which is into the next area of support, 595, down to about 590. The China tariff fear lows, of course. The weekly trends, still towards the bulls, right? I mean, we can start from all the way back here. They never lost the weekly uptrend since the month of April. Your new weekly higher lows are probably set, although we usually wait until a new high is established to call these the weekly lows. You can kind of take the hint that they might already have been set, and they would be down here at about the 590 level, close to the 12 EMA. Not too bad of a look for the bulls, still in full control. And I'll remind you, we are getting a whole bunch of those big tech earnings next week, right? Next week is a huge week for the markets. Next Wednesday, Meta, Microsoft, Google should be interesting. On Friday, thereafter, we get Apple as well. That should be very fun too. And if I'm not mistaken, Amazon should be on that day as well. So all of the big tech names coming at you next week, and a lot of fan favorites as well, such as SOFI, such as Reddit, etc., etc., etc. Next week is when really all the big tech names and other tech names start reporting. And then the week after that, you can clearly see we have more, such as Robinhood, good old ARM, good old AMD. I'm pretty sure Palantir is buried in here somewhere over there in the mix. So not too bad of a day for the Qs. Very nice broad market performance today. Moving on to the XLF financials segment. Well, we can clearly see that this was one ETF that was in a daily downtrend. It's now to the bulls to get it back. And it all starts with the size of the retracement from the most recent lows. If you give me a 618 retracement or a 782 retracement, which would be right into resistance, 53 down to about 52.85. This little pocket, which was previous support for the market, which we've since lost. If you can pull up in here, you create enough space off the lows for the bulls to either do one of two things: the full V shape into new uptrend, or the two-step recovery process of the daily uptrend. As of right now, not looking too bad, bouncing nicely out of the deeper area of support, which was always 52 down to about $50. That's what I was kind of commenting on down here. And my favorite plays, of course, for financials, you guys know the drill. Visa, very nice opportunity, still 340 to 330. I mean, when Visa's all the way up here, guys, I don't want to hear anybody complaining, right? Because this happened several times where Visa has been one of my favorite trades on the channel. The last time I was so adamant on pushing Visa, I guess, was all the way back here, and we all know how that played out. So Visa looking quite strong, but shout out to some of the banks looking very nice for possibly some weekly uptrend recapture patterns, or rather not recapture, but just weekly uptrend follow-through patterns, such as JP Morgan, such as Goldman Sachs. Decent little swing trade opportunities there if you're putting your stop loss, of course, below the relevant support levels. Moving on to XLV Healthcare. Decent move by Healthcare, challenging the prior highs, 145 to be specific. Now, the bulls are trying to go for the resumption of the daily uptrend and the resumption of the weekly uptrend as well. Clearest time frame for me is indeed the weeklies. We didn't quite make it back down to our test level down here, 138 with the EMAs. Healthcare is looking very strong. They're looking to make another attempt at the resistance range, 148 down to 145. The sector is still undervalued, in my opinion. The monthly looking good, though. Look at this monthly retracement size, right? The bulls probably have it in the bag at this point in time. It is a 782 retracement. So meaning, even if they don't fully get the entire V shape, right, they have a very good chance at a longer two-step process to finally put us back into a monthly uptrend, maybe finally start pulling away from this area, which has been a real big magnet for healthcare, let's just say over the last 4 years since 2021. Moving into semiconductors right now, everybody's favorite segment, 1.28% to the upside and a brand new all-time high. So after losing the daily uptrend, the bulls putting in some work, man, buying the dips hard. Now you got the full V shape, looking good on the daily for possible the two-step daily uptrend recovery process, or, you know, they want to push it a little bit further and do something like this and come back test the 345. That could be in play as well. One thing's for sure, though, on the weekly, we still remain a little bit overbought. So we are very stretched on many semiconductor names out there. Names like LRCX, names like ASML after its rally, names like Micron, of course. But on other names like AMD, of course, too, right? All the way up here. But on other names, especially the sector leader, it's not that bad. So if I'm looking for possible swing trades on semiconductors, looking for the continuation of the bullish momentum, I would be looking for some of the plays that have not broken out as substantially as other plays have. So please keep that in mind. And in the event you get the big pullback, well, you might just be coming down here to the infamous weekly 12 EMA around that 315. At that point, the entire sector will pull back, and you might just have more opportunities out there than maybe just NVIDIA. I mean, shout out to other players, right? Texas Instruments hasn't done anything for like a year at this point. Shout out to players like Qualcomm. They haven't done anything for like a year at this point as well. So those could be some nice catch-up plays, but then again, those are the consumer aspect of all these semiconductor plays. We went through that tons of times on the channel over the past year. Here's what I mean. These are all the companies that don't have that much in terms of data center exposure. They just went through their cyclical drawdown from 22 through the early stages of 2025. Big crush on EPS and big crush on revenues, as well as there was an inventory stockpile for three clear segments: personal electronics, cars, and the Internet of Things. Moving on to the Russell right now. The Russell not looking too bad, recovering a lot of the losses from last week. Price action is kind of all over the place, but a clear new daily higher low has been established with the low of Friday, 241.56. So they're going to be looking to push this daily uptrend a little bit more. The weekly, I will admit, is somewhat stretched. It's not that stretched, but it is somewhat stretched, right? That being said, a lot of people ask me, how do I position in the Russell? Because on the channel, I've been saying I'm waiting for this pullback right here. Well, I did also say, right, if we want to position for the Russell and we're going for the big expansion, right, either like this or like this for the pullback and then the expansion, guys, it's impossible to know, right? I would love to have a crystal ball and say, yes, this pullback is absolutely guaranteed, but I can't do that, right? When you are a bit late to the trade and we've already broken out, there's only one thing you could possibly do. If you're looking for the pullback, but you're not too sure if you're going to have it, but you still have some money and you want to position, we can position half into the breakout range and another half when we pull back. Because if you get that pullback, that's going to be a nice weekly higher low. It's going to be a phenomenal monthly higher low, would create the infamous cup and handle pattern formation as well. And that could be a way that you can structure your trade while entering a little bit late and acknowledging that you are saving some buying power for down here. So keep that in mind. Earnings for the Russell should be pretty decent, especially in light of the interest rate cut environment that we are in right now. So I would expect forward guidance from a lot of these companies into the next 6 to 9 months to be quite decent all across the board. And now, lastly, moving into some of our minor sectors here, XLP consumer defensives reacting from the resistance range, 80.5 down to about 79.5. It was a great buying opportunity down here, and I know several people did take that trade, so congratulations if you're already in. Is it still a good buying opportunity? Yes, if you just look at the monthly, we've been range bound here on this monthly chart for the better part of the last year. And eventually this sector will probably play a little bit of catch up, just like healthcare. So please keep that in mind. Utilities, very interesting sector, of course, because of the power requirements for the good old AI megatrend build out. You can see big move here, right? Out of consolidation. It's a gorgeous weekly uptrend. It's been that the entire time. If we look for a bit of consolidations towards the 12 EMA, you can either go for the utilities ETF as a whole or for individual plays. If you're asking me which ones I really enjoy right now in terms of up and running utility providers, not talking about Oklo or SMR or things of that nature. No, just clearly established players. There's a few that I don't mind. Talking about Next Era Energy, we first brought it up down here, looking to expand right now, but still, where is it? It still hasn't done too much, right? And this is a player with a lot of skin in the game already. We could talk about other players such as VST, which is another one of my favorite plays. I'm currently looking for a bit more of a pullback here, maybe to the 175 region, but even building a position here down into there is not the worst proposition. The company doesn't trade that rich either, contrary to some of its other sector peers. And now moving into real estate. So real estate, look at this real estate chart, man, especially after Powell, right? Strong move to the upside. It's been reacting from this support zone for a very long time at this point, guys. Call it since April, right? Very nice consolidation range, call it an accumulation range as well on the monthly timeframes, looking for the big breakout, whether you guys want to play some of the home builders, good old breakout, retest of the lows and possibly looking to run. That's not a bad idea. Some of the mortgage companies out there, those are not bad ideas either. There's tons of ways to play the real estate market. It just really depends which segment of that market you want to be exposed to. That's everything for our market rundown. Hopefully you guys enjoyed. Now jumping into the VIX. The VIX down a lot, right? We had the good old blow off top culmination of fear early Friday morning in the pre-market, almost coming up to 29. And now in just 2 days, guys, look at this massive flush. Trapped everybody. And now right back down to the lows, 18, but still a good environment to go shopping for some short put options on names that are red or names that are currently in or around support areas that you might be looking for. So try to take advantage of the remaining bit of volatility if you are an options seller. Moving into our yields right now. Nice move down on yields after the Friday rally. But one thing is for sure, right? Clear weekly downtrend on the 10-year yield right now. Your next stop, well, we are cracking below 4 again. Your next stop is going to be these guys down here at about 3.9. Suffice to say, though, weekly downtrend underway and almost monthly downtrend underway. And the 20-year yield as well is currently moving in the right direction down, right? And now we got to clear the good old 4.43 location. Weekly downtrend is clear. Now you just got to establish the monthly downtrend. And as we move into the rate cutting environment, I would not be surprised if that does continue, which means possibly good things still on the horizon for TLT, a trade that's been expanding. We talked about it so many times on the channel, down here around 85, 86, now approaching take profit target number 1, your low 90s. Take profit number 2, if we crack through that, is going to be 98 to 100, but don't think it's going to get there in an absolute straight line, just like Palantir. But still, guys, decent trade and decent movement on the bonds. Moving into gold right now, gold up 2.39%, basically engulfing Friday's move. A very solid move on gold. Of course, the asset that just continues to go up and up and up because obviously of central bank positioning, but also the possibility of a weakening dollar because of the balance sheet runoff ending too, and just overall bullishness surrounding the equities market as well, right? So a lot of Trump's policies are indirectly affecting the dollar to the downside, of course, and gold has been running. Then there's obviously the central bank portion that we talked about last week too, and just overall asset bullishness, right? So gold is really benefiting from every possible thing that it can at this current point in time, but very tough to chase this one right now. Arguably, if you are positioning here, you're going for the large breakout numbers, right? You're going for the breakout of 5,000, 6,000, but is that going to happen by the end of the year or into 2026? Nobody knows, right? This is the big money at play. When they choose to pause buying or slow buying, that's when you might find a bit of a consolidation area similar to what you had right here. But everybody is just guessing when that next consolidation period for gold is going to be. Just follow the price action, guys. When you lose the daily uptrend, that's going to be it. That's the same thing that happened back here, right? You lose the daily uptrend. It's probably the start of weekly consolidation. I'm not expecting a crash, but just maybe some sideways momentum. Wait for your moving averages to catch up. That is the type of stuff that I'd be talking about. Moving on to Bitcoin right now. Bitcoin, not too bad. Pop off the lows right here. Big sweeping daily downtrend directly into our area of support. 107.5 down to 99. 100, let's call it. Beautiful area of prior resistance for the markets. Current support for the markets and reacting nicely in that area again. Now, if we talk about retracement sizes, we're definitely not there yet, but we are on our way. This retracement size right here is a nice little 618. So in the event that the bulls get stopped out here at the daily 12 EMA, well, you do have a lot of space here to create sort of a higher low and go for the daily uptrend shift. That, of course, is if they don't just keep pushing right now. In my opinion, still a decent area to be DCAing into Bitcoin if this is an asset that you do enjoy, because we are just still in the confines of monthly consolidation right now. Bit of a monthly pullback, same thing that happened here, same thing that happened there, right? And this is kind of phase number 3, beautifully targeting into support. So selling puts down here and or accumulating some of your favorite Bitcoin ETFs or straight Bitcoin or MSTR or wherever you guys want to play it. Not a bad look in my humble opinion. And Ethereum, kind of the same concept, right? Daily, they try to go for the downtrend, couldn't get it done. Right, higher lows, and now maybe just into some form of an awkward tightening range. We'll see, though. If you want the daily uptrend, they do got to crack above 42.50 to really get that in motion and tell us that weekly consolidation is finished, and maybe take a stab here at the weekly downtrend as well and go back to these highs. But one thing's for sure, it's in a very nice area. This is the area that we had been targeting since all the way up here. I was saying watch the pullbacks in a 4K to 3,700. It is now here. So the accumulation phase for Ethereum is now upon us. If we're looking for more swing trade longs or building further positions, just save some room for down here because this is the absolute full retracement size to the larger area of support. So I am positioning for some Ethereum, but always leaving the door open for a bit more because I understand that, the market is a bit precarious right now. And you would not be surprised if they have some catalysts up their sleeves to bring you down a little bit more. That's it for your overall market rundown. Hopefully you enjoyed. Now, let's dive into big tech. And we're going to start off with good old Apple. Apple up almost 4%. Apple is the new Palantir. It is now confirmed. Guys, I mean, it's all a question of how many bullish headlines Apple's been getting off of the iPhone sales, right? You guys know the lead times right now, about 3-4 weeks, meaning they're sold out almost everywhere. The iPhone Air is sold out in China. When is the last time you guys have heard that an Apple product was sold out in China? It's been years. So their iPhone 17 release is going very well for them. It's outperforming the 16 sales by about 14% in relation to last year. So that's a very big upgrade for them. And one of the main reasons why the share price has really accelerated since that release date early on in September. So looking very strong on Apple right now. Daily price action was a bit mixed. We lost the uptrend. The bulls got it back in one clean sweep. You can argue maybe it's a two-step process, but here again, who's counting? The clearest time frame is the weekly time frame, in my opinion, the weekly bulls remain in full control. Very difficult to position up here. The last time we were interested in positioning on Apple was here and or here. Up here, not the best positioning for a few reasons, right? Well, number one, obviously, it's the blue sky breakout, all-time high breakout, big move. But the second reason, guys, of course, is the valuation, right? Apple doesn't necessarily have the best valuation right now. You're trading at a 3.26 peg. Now, Apple does often trade rich, and it was trading rich a little bit down here. It was trading a little bit more rich up here. You got to draw the line somewhere, and this is where I draw the line for Apple for me. So if we're holding any Apple, it's decent. But would I be adding any Apple up here? Probably not. I think there's better plays with more risk to reward in the markets. But congratulations to myself and everybody else holding this stock. It's been a while, and this is the kind of catalysts we've been waiting for to breathe a bit of life back into the brand. Moving on to AMD. AMD up 3.21%, cracking a new all-time high barely, but still it is there. Daily bulls control this chart, obviously, right? Very strong move by Apple bulls, setting the new daily higher low, a bit close to us, 228.26. So if you unwind this, right, because I'm pretty sure everybody's concerned of what happens if you unwind, well, who's in control, right? It's obviously still your daily bulls, looking very strong for the continuation of the weekly uptrend. If you move a bit lower, well, we don't really have many levels, right? The biggest level, of course, is down here at 203.68, and then you have the big old gap fill, but the AMD bulls are looking very strong, so strong that they are in weekly overbought conditions right now, about 80.5 on the RSI. And if you guys really want me to do the valuation up here at 240, just to make you guys feel better or worse or whatever, we'll do it right now. So keeping in mind, I'll redo this when they have their earnings in a few weeks, but it's not going to change the PEG ratio. The growth rates are what they are for the next few years, and that's why I love the PEG so much. But if we just want to do on a forward price to earnings basis, right, for the end of the year, that's a 62. And if you divide that by a 30% growth rate, right, well, now AMD is above a 2 PEG, so 2.07. is your PEG ratio right now. So now is when AMD is getting a little bit pricey. It was not pricey back here, which is the last area that I was building my leap call positions on, which they're now doing very well. It was definitely not pricey this entire time here that we were talking about it. But once again, kind of like Apple, where do you draw the line, right? Now, buys on AMD up here can be still rewarded, but it's all about risk to reward, right? You're having a lot more risk of a downside pullback nowadays, although I'm still a big fan of AMD and I'm holding every single share and all my call options, right? It just goes to show that some things, when they pull up a lot, they just become less attractive. My price target for AMD by the end of 2026 is still above $300. Moving on to Amazon right now. Amazon up 1.61, and that is despite the big AWS shortage today, which seems as though it affected everything except for the stock price. That being said, Amazon's not looking too bad today. Big downswing, of course. We did lose the daily uptrend. Now we're kind of trendless, that being said, right? The bulls had it. Nice daily uptrend. You lost it. You didn't really set much of a daily downtrend. No closes below the lows right here. And now you're kind of just chilling down here around the 213 to 205 support area with big earnings next week as well. Amazon's currently trading around the 12 EMA in terms of the monthly, which is a very nice location traditionally in the context of bull markets to go shopping for a bit of Amazon, whether those are leap call contracts, long-term shares for your long-term portfolio, so long as you agree with Amazon's expansion thesis, which is largely predicated on all lines of business continuing to do very well. Talking about AWS, talking about cloud computing, talking about advertising, talking about margin expansion, the pharmacy business, the robotics business, Project Kuiper, Project Zoox, the grocery business, so many other things, right? With Amazon right now, I think the thesis is very clear for the company, and analysts would tend to agree with me as well. The forward price targets for the company are largely all above the current share price. The EPS looking very good for the next 4 years. Revenue looking very good for the next 4 years. And this is your last remaining lagging big tech name in the market year to date, right? That used to be Apple. Apple was down 20% year to date. That's where we were playing it. Google was flat and down for the year for a very long time until that DOJ case, ruling brought some life into the stock. Now all we have is Amazon with some very solid fundamentals. So take from that what you will. I'm still a big fan of adding shares down here, playing the wheel down here. And of course, you guys know me. I already have loaded the boat with some leap call options. Moving on to Google right now. Google up 1.27%. Brand new all-time high. for Google bulls. Looking very solid right there. Daily downtrend. Now the big engulfing move. Any weakness. Looking for a new daily higher low. Anything above 237.12. New higher low for possible further trend continuation. Not so overbought on the daily, and you can clearly see the daily MACD going for a little bit of a cross right there. Not too bad. Could lead us to believe that there is more in the tank for your Google bulls. The next price targets are going to be round numbers, psychological numbers, 275 and 300. I'm not necessarily buying more Google up here. I'm holding what I have. The stock is looking very good. And even at 250, guys, the valuation, I'll be honest, is not all that bad. We just showed you AMD, right? AMD at the all-time highs is over a 2 peg. Google, just Freudian slip, right? I like Amazon so much that every stock becomes Amazon. Google, 1.73 peg. Not terrible, right? Moving on to Meta right now. Meta, very strong move. Finally, 2.13% off the lows. This, we were talking about it for the last few weeks, was a very nice accumulation zone for Meta shares. That being said, it was a very nice area of weekly support. This whole 700 down to about 680 region, that was the one that I was waiting for. It was also some of the monthly locations. Sorry, the support box is in the way, but you can clearly see that we were kind of pulling down towards the 12 EMA. And I like playing these pullbacks near the 12 EMA for Meta stock when they give it to us, especially in the context of a very nice monthly uptrend and in the context of improving fundamentals, which Meta, of course, does have. In around 710, the stock was okay, right? It wasn't cheap. It wasn't super expensive, just okay, at just above a 2 peg right there. So I did benefit from this discount to add some shares and to add some swing trades on the company as well. You're just looking for the breakout now above the infamous 730 line, which was problematic for the bulls in the past. It's these guys, it was support, it acted as resistance for a bit. So you can clearly see some things there. So we will see, can the bulls make quick work of that and get us closer to the highs? By the time we have earnings next week, we shall see. Moving on to Microsoft right now. Microsoft up about 0.63%, but still trapped between 518 and 505. So we'll see if the bulls can get it done and get us underway to a new daily uptrend or not. Keep in mind, Microsoft has earnings next week. So a lot of these companies that have earnings next week, guys, I'm not expecting them to either push tremendously or drop considerably. We might just stay in like a 5% up or down range by that time. I know it's a big range, but still, I'm not expecting like 10% pushes on any of these names, and Microsoft included. So right now, the bulls have just been kind of consolidating in this weekly accumulation pattern. I mean, the bias definitely is still bullish because they have the higher time frames, the weeklies, and arguably the monthlies as well has just been kind of like a bull flag, just consolidation, slowly, possibly waiting for the next earnings catalyst, of course, as they have done nothing since the last one. So keep that in mind. Am I buying more Microsoft up here? No, because I spent all of last year buying at these lows, and the valuation right now is not the best. Moving on to Netflix right now. Netflix having a really nice pre-earnings rally, 3.27% to the upside, but not really doing much, right? No real breakouts on this name right here. We're going to have to watch and see what happens because they have earnings tomorrow. So it's tough for me to say which way the stock's going to move, right? All I can give you guys is the expected move. Take a look at the expected move right here. Oh, no, it's true. They use AWS. Oh, wait, we're actually getting, I couldn't get these to load all year. All day. Take a look at Netflix right here. Still a little bit slow. Good old Amazon. Okay, well, they gave it to us. Thank you, sir. All right, expected move, 6%. 6% to the upside would put you all the way back down here into support, 1150, all the way down to 1112. This would be a buying opportunity for me after earnings. To the upside, 6% would put you darn close to the all-time highs. Now, Netflix is one of my favorite companies in the market. That being said, in around 1250, you're not getting the best deal for like quick upside returns, but what you are getting is management's guidance for 2030, which is the company being a $1 trillion market cap. And that will be roughly a 2x from here for the next 5 years. Not that bad in terms of a compound annual growth rate if you have a longer term time horizon. I am leaning with bullish bias into Netflix earnings, though, although I do not have any earnings positions. Moving on to NVIDIA. NVIDIA, this has been one of them that I've been saying has been lagging behind a little bit, right? The reason for the AI megatrend, this company right here, is just not getting the same lift that other companies are right now. They tried to break out, they failed, and they're still kind of stuck down here, 184 to 180. The bulls are playing good defense down here. If you lose this and break lower with the daily downtrend, you're going right back down to lower support, which is lower 170s. NVIDIA does not have earnings soon. They have earnings all the way out in November. However, I guess that depending on big tech's CapEx guidance that we get next week, NVIDIA is probably going to move. That being said, the bulls are playing good defense. No daily uptrend. We lost that, right? It was a nice daily uptrend back here. You lost it. Now you kind of need to get it back. But that being said, on the weekly, it doesn't look too bad. This has been a weekly uptrend this entire time. Looking for a weekly higher low, coming right into your weekly 12 EMA, playing nice defense around support. And the monthly has just been kind of awkward, wide consolidation here. A bit of a sideways move, kind of like TSM had a few months ago at this point. So I am a fan of the NVIDIA breakout trade. And I do have one small position to that effect, right? But at the same time, I'm also selling puts down here because the volatility is really good. Moving on to Tesla right now. Tesla up about 1.85%. Not the worst day for Tesla, but then again, they do have earnings coming up on Wednesday. So maybe you get the pre-earnings pop. I don't know, but what you're probably not going to get is like a 10-15% earnings breakout, pre-earnings breakout. That being said, if you look at the Tesla expected move, we'll get a sense of where we can possibly go with this one. 6.25%. So 6.25% to the upside. Take a look right here. 6.25% to the upside would be almost brand new all-time highs. 6.25 to the downside would bring you quite close to our area of support down there in the lower 400s. 400 down to about 385. I think this quarter, guys, is going to be all about, yes, deliveries guidance, because we know that's been soft, but especially margin, right? There's been a lot of margin compression at Tesla, and people are trying to ascertain when exactly that's going to stop. Especially, we have to, obviously we have to remind ourselves of the long-term positives. And that's why the stock is trading all the way up here, because it's definitely not trading up here because of the short-term negatives, right? But you do want to solve these short-term negatives sooner than later. So we will see, with the fact that we're in a rate-cutting environment, is Tesla seeing any manifested upswings in demand right now? That's, I think, going to be the crux of the argument for the short term for Tesla. Moving on to Palantir. Palantir has not done much of anything over the course of the past month, just accumulating. We're kind of trapped right now, 187 all the way down to 172. We had a bit of that action going on there, and the bulls, made quick work of that and were able to push to the upside. We'll see if they'll be able to do that again. Palantir with earnings coming up the 3rd of November, so a couple weeks away still. I don't know if they're going to break out before earnings. I'm also not really positioning before earnings, but I mean, if they break out, you guys know where we're going, right? 200 psychological, very clearly. The weekly bulls are still arguably in control. We haven't really lost anything, right? Just accumulation near the highs. Not looking the worst, right? You could argue that this is a big bull flag at the top end of a move, and I would tend to agree, right? So we'll see what happens before earnings. If you get the breakdown with big volatility, you will find me shopping for short put options down there under the 150 mark. But for now, no action for me on Palantir. Stock is holding up well, and that is in spite, of course, of very overbought monthly conditions and very stretched valuations, of course. Moving on to SOFI right now. SOFI up 8%. Strong move by SOFI, but SOFI has been super volatile in the past few weeks, right? That being said, if you want the daily uptrend, guys, you're going to have to crack 2971, the highs of this awkward, very volatile, newly established range. And of course, if you want the downside flush, well, you're going to need to crack 2572 again. Unless we get big bearish catalysts in the market, you probably won't see that happening. But SOFI has been fun to play the volatility around. Down here at 24 to about 22 area was a phenomenal area to sell some puts in over the course of the last 3-4 weeks of trading. So hopefully you guys made the most of that volatility. It was also an area to possibly reload towards these lows, reload some of the swing trade longs, right, that you guys may have taken profit on back there, or just extend the dates. That's what we were talking about on SOFI. I know a lot of people had leap options with end of 2025 expiries that they built last year. And I was saying, listen, no problem keeping them, but to keep them, you're going to need to extend the expiries and give the company a chance to push into its 2026 valuation, which could be north of, let's say, $40 billion, right? So SOFI is looking good. No swing trade longs for me at the current time. I mean, I still have all my shares. I haven't sold any shares, right? But no call options or things of that nature for me. But I have been playing the wheel a lot down there. So very nice move on SOFI today. Uber reacting nicely from the support range. Again, it's not like it's the first time, right? They've been reacting from this zone since the month of August, not losing 93.5 down to about 90. A very solid move, but still in the context of a daily downtrend. So you'll be looking for the bulls to kind of get that back eventually. That being said, it is just weekly consolidation in the context of this nice weekly uptrend that's getting tighter and tighter as we kind of move through the levels right now. Uber for me down here at the lower 90s is decently valued, especially for adding to some longer term positions. If you guys are a bull of the company and you don't believe robo-taxis are going to take over the business in the next 12 months, which is not what I think either. It's still in my long-term portfolio, so not too bad. Uber looking good up here. The valuation's good, but if we break down, that's when I start doing some short put action down there, as we'll just be looking for a good old monthly higher low in around the 12 EMA, lower 80s, better valuation, stronger support level, and just looking very good in terms of a technical setup. And last but not least, good old Taiwan Semiconductor Manufacturing Co. Ltd. That being said, we covered them after earnings, guys. They had such strong earnings, man. Such strong earnings. But then again, the valuation, right, is not as cheap as it was back here at 240. Definitely not as cheap as it was back here at 200, which were my last buys or add areas for this stock. At 295, the valuation isn't terrible. It's still under a 34 price to earnings. It's at a 1.7 peg right now. Not too bad. And the revenue guidance was absolutely ridiculous. They keep raising it, of course. Price action right now, though, very, very choppy. Obviously, the bulls are looking for the continuation breakout, looking to hold the 12 EMA, but still very choppy price action. And also on the weekly timeframes, guys, we are very extended right now on this chart. Weekly overbought conditions. You can tell how extended we are, right? If you go for a bit of corrective action down there, the first line of defense would be the 12 EMA. It's the only thing we have, 268, because the bulls didn't really do a good job of setting many support levels on the way up, did they? Just a bunch of very awkward candles and gaps. In the event you come back down with some volatility and we come down here, that is when you'll probably find me selling some put options down there on TSMC. And maybe we'll see how the price action comes into this level, but maybe some swing trade longs. But as of right now, for me, a little bit extended to consider some swing trade longs. Not the best risk to reward proposition. And you guys know me, I'm all about that risk to reward, waiting for my pullback zones to reload up some better areas with some better stop loss locations too. That being said, that's everything I had for you guys for the bulk of our market analysis. Hopefully you enjoyed. We're making good time on today's video. Now let's jump into the biggest gainers and losers of the day section. And I won't be going through 5,000 of these. We'll do like 10 or a dozen. So let's jump into it. Okay, so talking about some of the neo cloud providers, such as CoreWeave. CoreWeave down 7%. Not much news, guys. You can see they're kind of all down today, right? CoreWeave, NBIS, even Iris Energy was down. Bit of a retracement here. These companies ran a ton. It doesn't look that much on CoreWeave's chart, but from the bottom to that top right there, that was 78%. A crazy rally off the bottom. Looking to maybe cool off the time frames with some weekly consolidation here. Next support stays put. 125 down to 113. Come down a little bit more. You will find me selling some put options again down here in the 110 level, sub 110, maybe closer to like 105. Volatility is still good on a lot of these names, right? CoreWeave, NBIS on the pullbacks as well. Could be interesting maybe in like the lower 90 locations down close to the 12 EMA. I don't see any reason if we're holding long-term shares in these names, guys. I don't really see any reason to sell, but they did run a tremendous amount in the past month and a bit. So just some very normalized pullbacks right here. Iris Energy kind of suffering the same fate right now. Very overbought RSI. Phenomenal company, right? But, you know, the rally can't sustain forever and ever. So if we do get a pullback down there, I will be interested maybe like the mid 40s by the time the 12 EMA catches up. The bulls really have the bulls on this one and NBIS. They really haven't set much support areas on the way up. I mean, there's small temporary levels, but there's nothing massive, right? You're just going to have to wait until the bears kind of show you where they get exhausted at this current time. Maybe keep an eye on your short-term oversold indicators, such as the 4-hour leading into the daily, things of that nature, right? So very healthy pullbacks on these names. I wouldn't say necessarily that I'm worried whatsoever, but it is what it is, right? Just natural market movement. Elf Beauty, interesting one. Daily downtrend right now, almost cracking the bottom of our support range. Talking about this whole 125 up to about 140. We were not able to break above it in the last roughly month and a half of trading. That being said, if we break down a bit lower, weekly downtrend into a bit of healthy monthly consolidation, decent wheel opportunities down here around 110. I'm not necessarily adding to my Elf Beauty shares. Maybe if we make our way lower in the 100s, I could be interested. But that being said, there's not really much news affecting this company, right? They got caught up in the whole China tariff headlines because that's where they source most of their product. But I'm still holding every single share that we accumulated down here. And I think that Elf Beauty should be having a very nice 1, 2, 3 years ahead of us. And that is why I am holding my shares. Just some short-term volatility, of course. AAPL, this is another one that's been kind of a little bit soft recently, let's admit it, right? They tried to go for the daily downtrend 1-2 times, can't get it done, but the break is kind of impending, right? You can see a lot of weakness right now. Just looking for some very healthy weekly pullbacks on this name right here. I mean, arguably 514 might be level, maybe, but if you pull up to the higher time frames, I mean, we ran an absolute ton, right? So maybe if we can get closer down here into the 400s, you might get me interested. The last time we covered this one was after earnings August the 6th. Phenomenal company, right? Nothing bad to say at all. The daily active users is massive. Revenue was up massive. Margins were fantastic overall as well. Good free cash flow now too. And in around the mid 400s, the stock is decently valued. I'm not going to say fair, especially on a price to sales metric, but in relation to earnings, it's okay, right? It's just okay. So maybe if we can find it back there in the 400s, I might be interested again. But up here, it's still a little bit too rich for my liking just to buy a new position, right? If we're holding shares from back here, I obviously don't see a reason to sell because when you look at the company's longer term fundamentals, right, they kind of look something like this. You know, massive EPS expansion and massive revenue expansion as well. But it's all in the compound annual growth rate. If I can't find a good compound annual growth rate here because of valuation, I'm not going to take the trade. Some of you guys that have average costs down here, your compound annual growth rate is worth it for you, right? You're already up 2x. You can sit in this stock for a year without it moving anywhere, and you're still beating the market, right? So it's all about the risk reward all the time. Moving on to Oracle right now. Oracle kind of suffering the same fate as some of the neo cloud providers. It's been awkward price action to say at best, right? That being said, they might be going for the weekly downtrend and the full, well, not the full, because that would be all the way down there, but maybe some of the gap fill down here at around 250. I was very clear on my comments on Oracle after they had their earnings, guys. It was just a little bit too rich for me, above $300, talking about a 2.66 peg. Because keep in mind, right, when you're comparing Oracle and the size of the company, right, it's an $800 billion company. So obviously, what's my comparables? My comparables start to be like a lot of the big tech names. And when I can find some big tech names trading for under a 2 peg, well, why would I go with Oracle, especially with the amount of debt that they have, right? Even with the huge backlog, I'll just go for something else with a better risk to reward. I mean, even Meta is cheaper on a peg ratio basis than Oracle right now. So I'm not interested in Oracle, but maybe if you show it to me in the 250s or under, maybe, who knows, you might get me interested. Vistra, we talked about it earlier. Vistra, I'm a big fan. I was watching for some short put orders, but I have to get like 175. Get me close to the 200-day EMA, back to our prior support or resistance, which is going to be support at this current time. Just looking for the good old monthly pullbacks, right? Which you guys know me, I'm a big fan of playing these monthly pullbacks to the 12 EMAs. If it happens, perfect, I'll be there. If not, I guess I'll have to find something else, but this is definitely one that I am interested in. Talk about Duolingo. I mean, Duolingo is trying. Poor thing, right? It's trying. Support area down here, 300 down to 272. I mean, this has been the area where we've said many times on the channel, if you're a fan of this company, it's kind of the short-term buying location, right? No, the price is not very good, even up here. It is still quite rich, both in terms of PEG and in terms of price to sales. But to be fair, they are growing revenue and EPS very nicely, but you have to get behind the thesis that this company will not get disrupted by translation services. This is a language learning service, not a translation services. There is a discrepancy there. The people that want to learn a language are arguably different than the people that only want translation services. However, it'll always be about the daily active user growth for them, something that Netflix and Meta and other companies of that nature, Spotify, are beholden to as well. And I guess lastly, we can cover some of the insurance corporations because they've been doing really bad, but PGR down here, decent bet in my opinion, if insurance is something that you like. 218 and 204. I mean, Berkshire's been very soft recently. Allstate has done nothing in the past like year and a bit. So insurance has been very soft, but you guys probably understand why, right? A lot of these companies, they had unnatural moves from 2022 into late 2024, early 2025. All of that pricing power from inflation, they realized all of that there. Now they don't have pricing power anymore. They can't raise prices that fast. So you're seeing a normalization. It's very logical for the sector to go through a bit of normalization. That being said, if insurance is your thing, a lot of these companies have come down significantly from their highs and they're all very solid. There's no red flags. It's just normalization, right? Insurance companies are not supposed to move like this. So far off their quarterly trend or off their quarterly EMAs. And when it does happen, you get some normalizations happening, right? So insurance plays still interesting, but obviously they're slow and they're not for every type of investor. So please keep that in mind. That's just a few that I wanted to cover, guys, right? A few of the ones that we go over regularly. And then if we want to take a look at the flip side of things, well, biotech, right? Biotech, genomics. Pay attention to this. Decent narrative. And ARC-G is probably like the poster child for genomics, right? They've done something today that we have not done in 3 years. We're cracking above the 200 weekly EMA. Big momentum guide right there. Coming to resistance, though, 40 down to 34. This one, if you have a multi-year time frame, decent play, in my humble opinion. You could talk about biotech breaking out as well. Look at biotech, man. Hasn't done anything for 3 years. Starting to break out, and it all started with those pharmaceutical headlines a few weeks ago. You remember? With Trump, with the most favored nations stuff. A lot more funding, obviously, probably going into some genomics areas, especially with AI, right? So this is like AI plus biotech. So you have two very hot keywords right there. So ARC-G, if we're looking at position a bit here and a bit here on any pullbacks to cool off the time frames before another leg of rally, not a bad bet, but it is a lottery segment, guys. You guys know the drill, right? Biotech, arguably, there's nothing more lottery than biotech, but macro tailwinds, they do have. We already talked about SOFI. BMNR, you guys know my stance on this, just a proxy for Ethereum. I like BMNR. I like it here. I like it down in the mid 40s. Building a position here, not the worst proposition, right? Tom Lee's going for 5% of ETH. Around ETH 4,000, that would translate to a market cap of BMNR around 30 billion if they were to buy the remainder of their 5% now. So you have upside in two ways. Upside in the amount of ETH that Tom Lee still has to purchase, and upside with the price of Ethereum as well. Decent position there. Affirm, we've been very vocal about this one recently on the channel, pulling back here 70 down to 62. I was saying, listen, fantastic earnings last quarter, very high revenue and EPS run rates right now, and at $70, it's a 1.32 peg and a 5.7 price to sales. Relatively cheap for this style of company. Additionally, you have a very nice monthly pullback for a monthly higher low into prior monthly resistance, current monthly support, and a monthly 12 EMA. All criteria for some decent swing trade longs or for some short puts. So keep that in mind. SMCI, I haven't talked about this company a lot, but I was saying that back here, guys, in the whole September dip, it's not bad. We covered their earnings in August, and it was down here in August. And I was saying, you know what? For a lottery play for the sector, it's not terrible. Around 48 bucks, guys, is still pretty darn cheap. And even here at 55, it is still cheap. That being said, it's moving into resistance, 55 up to 63. If you want to play this one for a lottery play, I mean, I'm not recommending it. I'm just saying the risk reward isn't terrible. You can definitely justify it. So take that for what you will. A Tempest AI, obviously part of the whole medical AI trade. Very decent price, in my opinion, for Tempest AI. Very decent price action, that being said, right? If you go for more of a weekly pullback, possibly some short puts down here in the 70s, not the worst proposition. If we have any shares that we've accumulated from down here, I don't necessarily see a reason to sell either. Klarna, some people are bidding Klarna, some people are bidding Sezzle in opposition to Affirm. If you want to do that, fine, you can do you, right? These companies don't trade at expensive valuations. I'd rather take the industry leader. Klarna has more business, but I think Affirm has more solid business, less delinquency rates as well. I think they also have better deals, better merchant partnerships, but that's just me. If you guys want to play the other ones, completely up to you. Maybe not the worst proposition. Trade Desk firing off the lows, but this one, every time I look at this chart, I'm like, yeah, it could be a decent swing trade. I remember why they're down here in the first place. Amazon, man, oof, it's tough, man, to get behind this trade with Amazon, right? And so to speak, right? They're not even that cheap. You'd expect with the share price crush like this, you're expecting to see like a 1 peg. It's a 1.5 peg, you know? It's not even that cheap. Forward price to earnings of 31 and forward price to sales of an 8.6. It's not that cheap. That being said, revenue and EPS growth rates are decent, but this might just be falling because Amazon is kind of eating their lunch. If you want me to give you a quick summary, Trade Desk charges 20% markups, 15 to 20% markups when they run advertising wholesale servicing for you, okay? Do you guys want to know how much Amazon charges for that exact same business for advertising matchmaking between the buyer and the seller of ads? 1%. That's not even close, man. If Trade Desk was charging 15 to 20 and Amazon was charging 12, okay, fine. There's not that much of a discrepancy. Maybe Trade Desk can adjust, cut some EPS growth here, cut some margins, and compete with Amazon. Dude, man, Amazon's charging 1%, man. They do this all the time, man. They get into a business and they just destroy other companies. It's very unfortunate, but it is what it is, I guess, at the end of the day, right? APLD, same thing as IRN, same thing as NBIS, but this one just didn't go down today. Good volatility if we're looking for some pullbacks, maybe under 30 could be an interesting bet. Up here, it's a little bit rich. I mean, they have all the momentum in the world, right? It's just very tough to just position. Close your eyes, just hit the buy button, I guess, is kind of the best way of doing things. Just trust the momentum. Use the force, young Padawans, I guess, right? That being said, if we do pull back a bit more, as we covered on the top 5 options list yesterday, we do get some really nice premiums down here with the volatility. And then we have CRM. CRM, I mean, maybe we'll see a SAS run here. I don't know, but maybe. ServiceNow, not the worst positioning. Monday.com down here in the support, 186 down to 156. Not the worst positioning for this company either. CRM destroyed, not the worst positioning, but you guys know SAS has been super soft. Adobe even, not the worst positioning, right? They're not the sexiest trades, but the valuations definitely make sense down here if this is your style of trade. If you want to go for the recovery story of SaaS, not bad. Some of the SaaS players out there, cybersecurity had a great day today. CrowdStrike up 4, Palo Alto up 2%, obviously, right? They're pushing the top end of their valuations, though. Palo Alto trades very rich. It's one of the market leaders. Maybe they deserve it, maybe not. Who's to be the judge of that? I guess Wall Street. CrowdStrike, also very rich. The ones that I'm playing, you guys know already. I'm playing Sentinel-1, this tiny little AI company stuck at the bottom of a 2-3 year range. I'm playing this one because I'm a big fan of better risk to reward. And when I see good risk to reward in terms of 2026 numbers, I go for it. Sentinel-1 and Rubrik is my other top pick in cybersecurity, but that's just me. Moving on further, I mean, there's just too many names here, right? Moving on further, I mean, I guess we could talk about which ones you guys probably want me to talk about. Robinhood. Robinhood, not looking too bad, of course, right? Not looking terrible, but I mean, hey, right? We're currently trading at what? Like a 6 peg, 7 peg right now? Almost at this point in time at 135. We did it at 107 after earnings, yeah? At 137, what? You're trading for 100 forward price to earnings? Trading for a 7 peg? What is this stock? Palantir? It's a brokerage at the end of the day, right? It's a brokerage. So they'll have to kind of grow into those numbers eventually. But I mean, it's been forming strong, right? Very nice weekly uptrend. I'm not playing it up here, but you guys do you. You guys know me, right? Shopify. Talk about Shopify a little bit. We covered them after earnings at 150. We did say the stock was expensive. Maybe it deserves it because of the very high growth rates, but are there better valued plays in the market with equally high run rates? Yes. If we have some shares on Shopify down here, should we be selling? No. The forward prospects of the company are very good. It's the app loving argument, right? If I position up here, maybe I'm not getting the best compound annual growth rate in relation to other names. And I care about that, especially if it's a multi-year hold, right? I think that's going to be it for today, guys. We covered so many other names. The other names we covered them last video, like Mercado Libre, you guys already know that's a buy from me. And the other names, I mean, we covered them pretty much every single other day. So that's going to be it for me today, guys, in terms of the overall market rundown. Oh, one last thing. What's it called? Portfolio rundown. Didn't do too much. Really good day in the portfolio today. The only things that we did is we covered up our Affirm assignment with some super juicy covered calls. If you guys want me to show you the covered calls, let me just throw them on the screen right now. I mean, they're right here. Affirm covered calls, 68 covered calls. We got assigned at 68. We got $4.15 for 2-week covered calls at the 68 strike. I'm very happy to just get my strike, get $4.15, which is 6% for 2 weeks, and just turn around and flip them out before earnings, perhaps. Earnings are in 3 weeks. This is the week right before that. I rolled my BITX covered calls for another $1.15 in credit. Our average cost on those BITX shares that we got assigned a few weeks ago at 52 is really, really good right now. You guys can see the running P&L right now. 44.56 is our average cost on BITX. Looking very good. And the only other thing I did today, truly, well, we did close the SOFI trade, of course, which ran worthless. The only other thing I did in relation to Saturday or Friday's video, guys, is NVIDIA. NVIDIA was on the top 5 options list. You had to be pretty early to this trade this morning. 85 cents, 172.5. Nobody should be surprised. It was on the top 5 options list. That is literally the only things that I did today. All the other positions remain the same. And here they are in all their glory. All the other positions remain exactly the same. You guys can see that little IRN cheeky $47 put, which is in there right now. The HIMS is doing well. We still got covered calls on most of our assignments, which are all up here. And the average cost of those assignments are still very low. So that's everything, guys. I mean, maybe tomorrow if I make more trades, I'll give you guys more updates, but that was it for me. Just a bunch of covered calls, NVIDIA, and I'm just holding back my buying power for a lot of the earnings this week or anything else that possibly shows up on my list. That being said, that's everything I had for you guys today. If you enjoyed, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new. Almost 10,000 subscribers, guys. Can we please get me there? I don't ask for much, but it's a big milestone for me, man. I've been at this for 2 years. So if you guys can hit the subscribe button, would really appreciate it. And lastly, if you have any questions, please feel free to reach out down below in the comments. And last but not least, if you wanted to join our trading and investing community of over 300 different members, the link to join our community is down below in the video description. Of course, as I always say, you guys get access to all my trades, the wheel trades, the call options, the call debit spreads, the other spreads, the swing trades with shares, everything that I do in this section right here. The green little check marks are wins. The red little circles are losses. You get all those. You get the private morning live streams every day for 2-3 hours. You get the private video educational section, our chat rooms where you can ask me everything all day. And you can copy paste all of my charts with all these earnings breakdowns, support resistance, all that good stuff. That's everything for me. Take care. Peace.